Yo guys, welcome back to the channel. Now in this video, as you can tell from the title, I'm finally going to be telling you guys how to buy index funds using Vanguard in the UK. This is a video that has been on my list for a while now. This is a video that you guys have wanted for quite some time now, so hopefully you do enjoy it. I'm going to be talking about pretty much everything you need to know about index funds with Vanguard and how you can start investing, how you can open an account, what you need to know, the type of funds you need to. Anyway, you're going to know everything by the end of this video. Remember guys, if you do enjoy the video, feel free to like, comment and subscribe to the channel for more videos like this. But let's get straight to it. So we're going to start off the video by going onto the Vanguard website, and if we scroll down now, you'll be able to see that there are two ways Vanguard allow you to invest. And there are two types of portfolios they can build for you. If we go into it and click it, you'll see that there's a life strategy fund one and there's a target retirement one. The target retirement one is one in which basically you set a date in which you plan to retire, and then Vanguard start investing up until that deadline. So these are the two types of portfolios that Vanguard can actually set up for you. But that's not really what we're here for today. I believe most people want to actually set up a portfolio for themselves and actually invest by themselves. And that will be through here, build your own portfolio. But before we go into that, we're just going to look at the types of accounts Vanguard offer really quickly. And as you can see here, they have a pension account, they have a stocks and shares ISA, which is the one we'll be talking about today. They have the junior ISA. Now this is the ISA I'm always talking about for all you young guys out there, all my subscribers who are below 18, who want to start investing, but they believe they can't for some reason. That's not the case. If you're in America, it's called a custodial account. If you're in the UK, it's called a junior ISA, and you can actually start investing. Show this to your parents right now. Tell them that, look, you guys need to sign me up for this thing. I want to start investing as well. I want to start making money as well. I want to start making passive income as well. You can actually do that, guys. So don't be discouraged. Set up a junior ISA. And then you have a general account. I will stay away from this one because this doesn't have many tax benefits. You will end up still paying capital gains, you will still end up paying tax on your capital gains. So we're going to be talking about the stocks and shares ISA, but before we get to that, actually we'll just look at that right now. And if we click on this and we scroll all the way down, you can see the benefits. You pay only 0.15% per year. It's very flexible, so you can either choose your own portfolio or they can build one for you. You've got over 70 Vanguard funds, including ETFs, index funds, and life strategy funds. You've got no hidden charges whatsoever. You've got access anywhere, and you can now. Oh yeah, I forgot to mention, guys. When you're investing in Vanguard, you actually there's a minimum amount you have to invest in. So it's either you pay a lump sum of £500 or you invest £100 monthly, as you can see here. Now, yes, that can be a disadvantage if maybe you just turned 18 and you don't have that much money with you. But over the time, if you actually think about it, it will help you because you've set up this. You've just put a certain amount of money towards investing, and you probably won't think about that money anytime soon, but you've actually got a big amount of money in your portfolio, if that makes sense. So as you can see here, who can open a stocks and shares ISA? You need to be at least 18 years old and a UK resident. If we quickly scroll back up and you press open an account, you will see here that you need these three things in order to open an account. You need your national insurance number, your debit card details, and your bank details for regular payments. So it's really as simple as that, guys. Opening an account is not that hard. It's almost like signing up for Twitter or Facebook or Instagram, whatever. You get the idea, guys. It's really not that hard. It's just like opening any other account. Just because it's an investment account doesn't mean you have to go through this long procedure to open it. Now let's go back to the homepage and talk about building our own portfolio, because I believe that's what most people watching this video will actually want to do. It will be to actually have control over their investment portfolio and make decisions for themselves. Now obviously there will be a fair few people who buy their own portfolio through Vanguard, but most people will actually want to build their portfolio. And let's actually just click on learn more about funds. And if we scroll down a bit, you'll see that there are three different types of funds that Vanguard have to offer. They have index funds, active funds, and ETFs. Now, if you don't know the difference between index funds and ETFs, they're very, very similar. The only difference is the way they are bought and the fees that come with them. If you don't know what index funds are, essentially they're almost like a basket with a variety of different assets bundled into one, and they actually track the performance of those assets rather than buying individual stocks. I don't know if I explained that well, but you will see the definition here. Let's click on index funds. If we go down, we will see that rather than relying on analysts and fund managers to pick individual shares of bonds that they think are going to do well, index funds track the overall performance of an entire market index, like the FTSE 100 or the S&P 500. So for example, the S&P 500, as you read here, you probably heard me say that word countless of times in my videos. And essentially what it just means is that it tracks the 500 largest companies in America. That's literally what the S&P 500 is, and that's just the whole basis behind an index fund. Or you probably heard of the Russell 3000, which tracks 3,000 companies in America. And the founder of Vanguard actually has this very famous quote, which says, "Don't look for the needle in the haystack, just buy the haystack." That's literally the whole idea behind index funds. Track the whole thing rather than just tracking one thing. Now, on the other hand, we have ETFs, which are, like I said, guys, are very, very similar. But if we click on learn more, you'll see what I mean. ETFs, if you scroll down a bit, ETF stands for exchange traded fund, and they offer you a way to invest in a wide range of bonds or shares in one package, similar to what I just spoke about, guys. Unlike other funds, ETFs are traded on the stock market. That means you can buy or sell them at any time during the day. So with index funds, guys, you can't buy and sell them at any time during the day. It has to be at the end of each trading day. So that's once a day, pretty much. You can only buy an index fund once a day. But with ETFs, you can buy it at any time of the day. You can actually just buy it at any time of the day. It's like an individual stock. So hopefully you guys are enjoying this so far. I really do hope you've understood everything I've said so far. You've now learned the difference between an index fund and an ETF. You've seen the different types of accounts you can create with Vanguard. You've seen what you need to open an account. Let's move on and actually now see the different funds. So we're back on this page now, and let's actually click on index funds, learn more, and press view index funds. Now you'll see a comprehensive list of different types of funds. Let me just close them all so I can explain each and every one to you. So now with blended funds, essentially the whole idea behind blended funds is that it's a mixture of different types of funds. It is usually a mixture of growth and value stocks. Remember, guys, I spoke about that in my video on the stock market and how to invest. If you've forgotten, essentially growth stocks are stocks that have the potential to appreciate by a great amount sometime in the future, while value stocks are stocks that are currently undervalued and will soon reflect the real price. So that's essentially what blended funds are. If you click on blended funds, you'll see here that it consists of equity and bonds. Those are usually the two types of assets that are in a blended fund. Now, as you can see here, the risk is pretty much sitting on the fence in the middle. Not too risky, not low in risk, and not high in risk. Because usually with equity, if shares go up, then bonds tend to go down, and if bonds go down, shares tend to go up. So it's really almost weatherproof here. Not much of a risk here. And as you can see, you can check the performance as well, and if this loads anytime soon. As you can see here, not too bad performance actually hasn't been too bad recently. Now, let's look at another type of fund. We're going to look at equity funds. As I mentioned earlier, equity funds are basically funds that are just pretty much full of stocks. The assets that you're going to find in an equity fund are pretty much just going to be shares. And these funds tend to be riskier than, a blended fund or fixed income fund. So as you can see here, the risk here is 6, 5, 5. These tend to be way riskier compared to what we just saw with a blended fund, which had a risk of 4. Now, as you can see here, it's 100% equity in the asset allocation. This is where you see it, guys. This is where you see the risk, by the way. You can also see a detailed review and see the past performance over the years, but we're going to get to that later. So anyway, you can see that this fund has 100% equity. That's 100% stocks, 100% stocks, 100% equity in all these funds. Now, moving on to fixed income funds. Now, these are essentially funds that pay a fixed amount of income, as the name implies. So you either get a fixed amount of interest or a fixed amount of dividend, whatever the case may be. And these funds do tend to be bonds. These assets tend to be bonds. As you can see here, 100% bonds, 100% bonds. It's usually always bonds with fixed income funds. And as you can see, the risk is usually low, because if you don't know what bonds are, it's basically you borrowing money to the government. The government is seen as a reliable debtor, so you do not really have that much risk. And that's why the risk is usually very low, because the performance tends to be good. If you look at the performance of this, you'll see that it's not too bad. And that's really essentially what fixed income funds are, guys. Now, I'm going to talk about whether you should invest in fixed income or equity later on, but it really depends on you, but I will say my view as well. Now, with money market funds, these are essentially funds, assets that hold assets in very high liquidity. So for example, your cash and your cash equivalents, these tend to be very, very low in risk. So as you can see here, the risk is 1. I don't think we've seen anything lower than that today. I don't think we've seen any other 1 rather. So you can see the risk is very low in this. There's not really much money to be made in money market funds. So that is essentially explaining the 4 types of funds you get on Vanguard, from index and active funds. Actually, I just realized that we're not looking at all the funds. Now we are. Let's go to equity and let's go down. I'll show you one of my favorite ones, the one that I always talk about. And that is, where is it? USA, S&P 500. As you can see, let's click on it, you'll see the Vusa. And the beauty about Vanguard is just that it's just so user-friendly, it's so well put together, it's so well laid out. It's just, you guys know that this is one of my favorite platforms besides Trading 212. But essentially, this is S&P 500, like I'm always talking about, the one that tracks the 500 companies in America. Bear in mind there are two, there's Vusa, which is the UK one, there's VU, which is the one you buy in America. So as you can see here, one share costs £53.23. There are 507 stocks in the fund. The ongoing charge is 0.07%. And as you can see, the risk is 5 out of 7. So it's almost sitting on the fence. Not too high, not too low. You can see the inception date started in 2012. And it really just lays it out for you. It tells you everything about it. It actually gives you the performance as well. It shows you the chart. It gives you the pricing performance. It gives you the portfolio data, distributions, cost, like literally everything you need is here. When I'm talking about research, guys, this is also what I'm talking about. I'm not just talking about going onto Twitter and checking what's trending and investing in that. So as you can see, guys, here, Vanguard have given you literally everything you need to be certain as to whether you're going to invest in something or not. And it's literally as easy as pressing invest now. You now have one fund in the basket, continue to purchase, and you sign in or you create your account and you buy it. It's simple as that. But let's go back and talk about equity versus fixed income funds. And now there's a debate here, and what I would tell you to do, because with equity funds, like I said, it usually tends to be way riskier because you've got it's usually just 100% equity, 100% shares. Whereas with fixed income, it's usually less riskier. It's just bonds. It's more of a safe haven. What should you invest in? What should you put more of your money into? Well, what I would say is that if you're younger, like me, for example, I would put more money into equity funds because you can afford to make more risks. You can afford to make more risks once you're younger. You still have way more years ahead of you. Hopefully, your health is intact. You will have more years ahead of you by God's grace. You may not have children yet. You may not have any debt on your hand, maybe student debt, but you know what I mean, guys. You don't have that many responsibilities at a young age, so you can afford to take more risks. You can afford to be riskier with your money, as opposed to someone who's about to retire. They would prefer to invest in bonds and fixed income funds because that is more of a way to preserve wealth rather than make your wealth appreciate. So it's really up to you. Like at the end of the day, it's his personal finance. That's personal. What may work for me may not work for you, but the rule of thumb is just to invest in equity at a younger age. Most of your money should be going to equity funds if you're young, and then as you grow older, it should be fixed income funds. Of course, you should also have some blended funds as well, just to balance it out, because what tends to happen is that when equity goes up, when shares go up, bonds tend to go down and vice versa. So it's just almost like a safe haven for you to balance it out. And if you still need help, if you're still not sure what to do, Vanguard have a help page. They can literally answer almost all the questions you will probably have about the platform and about the funds and investing. Everything here is for you to answer. If you want to ask me a question, feel free to leave a comment down below. I will answer you. But yeah, guys, that really wraps it up as to how you can buy index funds, as to how you can start using Vanguard to invest. I really do hope you found this video helpful and useful. As always, if you did enjoy the video, feel free to like, comment, and subscribe to the channel for more videos like this. Let me know what video you guys want to see next. Thank you for watching, and as always, I'll be back again.